All right. Hey, everyone. So I'm going to be talking about DAO first capital formation. Hopefully, some of you have read the article that I published like maybe a month ago or so, a few weeks ago. I'm going to try and give like a high-level overview of that, but maybe dig into a couple of topics, and I'll leave some time at the end for questions if anyone wants to drill down further. So I guess the starting point, what is capital formation? So, traditionally capital formation was this idea of like accumulating capital, particularly around nation states. What did you need to do to ensure that you were building up kind of a sustainable pile of capital to be able to continue to operate? I think it's kind of evolved, and the term now is also used for just raising capital. But with DAOs, it's not just the process of raising capital that we care about. We also care about ensuring that it's done in a sustainable way. Anyone in this room can probably put their hand up and raise a couple of $1 million at this point in the market cycle. But we want to make sure that you don't just do that and then squander the money or not actually produce anything from that. So there are obviously options and trade-offs. Now, for most of crypto history, I think when we've been raising money, we've raised it through traditional means. So things like equity, direct equity, warrants, all kinds of weird and wild instruments. The idea of raising money directly into a DAO, probably, other than the DAO itself, hasn't really been something that I think people have been comfortable with until maybe the last like 12 to 18 months. And it's kind of accelerated since then. And there are a number of advantages, but one of the reasons why I think people have been concerned about raising money directly into a DAO is they think that investors or people that are going to provide capital are going to be concerned with the idea of just sending money to some contract, right? And again, there are obviously trade-offs with that, but I think the reality is that most of the sophisticated investors, particularly angel investors in the space, people who've been in DeFi, people who've been in crypto for a long time, are very comfortable with this idea. So a lot of the teams that I talk to are really worried. They're like, if I just give someone a contract address and say like send money to this, is anyone going to actually do it? Obviously, it's important that you build up credibility and that there's some confidence that people have in you. But ultimately, a lot of the things that we build in the traditional system around equity grants and traditional capital raising is like a false economy, right? You're putting all of this structure in place to provide confidence to people, which is not really there, right? There isn't really much in the way of protections for investors. It's not like someone's going to turn around and sue the average startup. Like Andreessen doesn't run around suing startups very often, unless they're directly defrauding people. And so if you start with this DAO first model, you are much leaner and you're in a position where you're not going to be restricted in what you can do. You're not going to be restricted in how you can engage with your community and how you can build a community and how you can create something that's collaborative. So this is kind of outside of the scope, but a lot of the teams that I talk to have already raised capital, and they've done it in some traditional way and they've created some issues for themselves. Almost all of these things you can unwind. So if you're out there and you've raised a couple of rounds of capital and you're thinking, what do I do with this? I've got, a cap table with a bunch of people that own equity and I don't know how to, convince them to convert to some sort of DAO model. I think, again, a lot of the investors in the space are very comfortable with this idea. And basically what you need to do is you need to approach them and say, this is the transition that we want to make. You need to get buy-in from them, and you need to work out a way that you sort of discharge the obligations of some centralized entity that has equity or has some capital structure that exists and convert it into a DAO. It's not impossible to do. It's very easy to do. So if you're out there and you're worried about it and you want to grab me and have a chat about it, I'm always happy to try and unwind really dumb things. So let me know. So the pre-DAO stage. Right? As everyone knows, you start off with an idea or there's a couple people that are talking in a Discord or a Telegram channel, and they want to go and build something, right? There's a million things we can build within crypto. The solution space is wide open, but you start off with just people that are kind of coordinating, over a chat or in person or whatever, and there's no rules, there's no structure, right? And typically, in a traditional environment, what you would do is you'd get to a point where you say, okay, we want to incorporate this entity, and we're going to agree on what the equity structure is, and we're going to go to a lawyer, and they're going to draft up all these documents. It's going to be fun and whatever, right? Spend a bunch of money doing that. When you create a DAO, the opportunity is to do the same thing, but to do it in a much leaner way, right? And so that transition from the pre-DAO phase where you've got 3 or 4 people in a room, or maybe 5 people, or maybe a small community that wants to go out and build something and wants to take in capital and kind of formalize it, is basically finding a way that you can structure the kind of distribution of governance and control of that entity in a sustainable way. And so we've seen a lot of examples of this. I think one of my favorite is probably Barnbridge. So the Barnbridge team, they turned up, there were, I think, 4 or 5 people initially, and then it became like 10 or 15 people. And they came up with this really good idea of, we don't know what this is going to look like, we don't know which investors are going to want to be involved, but we want to put something in place where we can all kind of coordinate without having to just discuss things on Telegram, right, or on a Zoom call or whatever. And so they created this like pre-governance token. So they allowed some people to bring some money in, create a pre-governance token, and that created a coordination mechanism for everyone to agree on the rules and start to structure things. And we've seen other teams do that now. Alluvium's done it, Spool has done it, there's other DAOs that have kind of come together and done it. Ultimately, it doesn't matter exactly how you do that, but you do need to kind of make a decision around that break point where you think you've got enough momentum in a group of people that you're ready to kind of formalize things, and then you need to come up with a coordination structure that will support that. So I think that's probably one of the most important aspects of this, right? That this is not a control mechanism. So when we think about like traditional corporate governance, it's really about control, right? There's a CEO, there's a board, there's all of these structures that allow for those people to control what can happen within the organization. With a DAO, we ideally don't want anyone to be in control. We don't want this hierarchical process where we feed up to a single person who's in charge of everyone else, or a board that's in charge of the entire structure. We want to make sure that we're creating a fair and legitimate process for everyone to coordinate. And so this idea of creating these kind of pre-governance tokens or some early governance structure is quite powerful, because you can distribute that without handing over control to any particular person or any particular entity. And again, to use the Barnbridge example, it worked really well. I think there were probably 25 maybe people who held the original DAO tokens. And what that allowed them to do was coordinate around what the next phase would be. And they were doing that coordination in a legitimate fashion, right? They weren't having a few people that were making direct decisions about how the system was going to be structured or what the transition was going to be, which, in a typical corporate structure, you would have people who would effectively say, this is what I think is going to happen, and I'm the CEO, and I'm going to do this, and you all have to get in line, otherwise I'm going to fire you or whatever, right? And I think that allowed them to create a community and engagement in this collaborative atmosphere, but still have a mechanism to make decisions. Because ultimately, decisions need to be made, right? And I think one of the aspects that really trips people up is kind of changing your mindset as a small team that's building something. You can't make the decision. The community needs to make the decision. It's not your decision to make. You can guide people. You can say, this is what I believe is the best thing to do. But if you have the control to be able to say, this is what we're going to do, then you've kind of broken the model, right? So you need to advocate, you need to go out, and you need to make your case for why we should do X instead of Y. And so, this is, I guess, the process of building a community is hard, right? And this is something that I talk to teams about a lot. They say, how do you get a community that's bought in to what you're doing? And I think there are a couple of things that are really important. One is legitimacy. So you need people to feel like the decisions that are being made within this entity, this organization, this protocol, this project are legitimate. If people feel like they're being, dictated to, right? If they feel like there's a dictator, and I'd say that jokingly, right? Because, I was the dictator of synthetics for a long time. But even as the dictator of synthetics, I still had to take input from the community. There was no process, and the community oftentimes would overrule me. I would say we should do this, and the community would say no, right? And so I think the process of engaging a community and really getting them to believe that their input is important and that the decisions that are being made in collaboration with them rather than being pushed on them is really critical and important. And if you don't do that, then what you have is essentially governance fatigue and all of the things that we see in some of the places where we have, let's say, direct token voting or whatever. I think another aspect is you need to actually be there. You need to be where the community is, and this is another thing that a lot of founders ask me about. They say, how do I get people interested in the project? What should I be doing? And I think you're going to attract people who care about the problem you're trying to solve if you're solving it with them out in the open and you're talking to them about the challenges and you're being very transparent and you're kind of walking them through the process. And if you go back to the synthetics early days, like the early 2019 period, most of the good ideas that came out of synthetics then did not come out of the team at the time. They came out of individuals within the community, people on Twitter complaining about things and saying this is a bad idea, and the community then responding to that. It was a very collaborative and open process. It wasn't this kind of closed door decision making that was then pushed on people. And I think that if you're a founder and you're building something, let's say, take an options protocol, right? You're building an options protocol and you're, obviously there's a lot of work to do, there's a bunch of things that you need to do, and you're building that kind of behind closed doors. The people who are really interested in those hard problems that you're trying to solve then can't engage with you, right? It's really hard for them to engage with you. So if you're in your Discord or wherever it is, Discord's quite good because you can kind of thread exactly, the different discussions and different things that people are interested in. And people will be interested in different things, right? Some people will be interested in mechanism design, some people will be interested in price, some people will be interested in, governance decisions. But if you are there on the front lines talking to them, you will have a much more vibrant and engaged community than you would have if you just push out an update once a month and say, this is what we've been doing in the background. Relinquishing control. This is a hard process. So for those of you who followed synthetics, this is very much an iterative thing. You need to experiment with it, and every project has its own kind of idiosyncratic challenges that it's going to face. There's some projects, Uniswap's a great example, where all three versions have kind of been built and then pushed out to the community, and then the engagement process has kind of been post-design, right? So like there'll be a design and implementation, it's pushed out to the community, and then everyone comes and discusses it, and then they go back and they iterate and they push out a new version, and they're immutable, right? There's no changes. Whereas you've got other projects where there's multiple changes happening all the time, whether they're kind of changes to do with parameters or the fundamental protocol changes. And I think that for all of these things, you really need to understand at what time is it appropriate to hand over control. So in our case with synthetics, we made a decision to hand over the parameter control to a group of people that were essentially voted in by the community. Previous to that, we actually had direct democracy on these changes, right? We had, essentially a Discord poll would decide every single change, and we'd roll them out. And then we realized that the engagement was, not as high as we wanted, and we wanted to ensure that people were going to have the ability to kind of dig into what the implications of these changes were going to be. So we handed over parameter control, and then we tested it. We iterated on it, we realized what was working, what was not working, and then we eventually handed over full protocol control. But that's not every aspect of control of the project. There's also long-term strategy, there's treasury management, there's all of these different components. And so my personal view, and I think the view that we've had with Synthetics, is you need to just iteratively experiment, and you need to be willing to realize when you fuck something up, and you need to roll it back. So one of the examples is obviously within the core contributors, me stepping back and saying, okay, core contributors, go off and let the Spartan Council control you, was not a success, let's just put it mildly. But it wasn't to say that it was an abject failure, it was just, it wasn't as efficient as it could have been, right? And so we ran that experiment, and we realized that that experiment didn't work, and so I came back to say, okay, what can we do to kind of experiment, and what changes can we make, what tweaks can we put in place to ensure that this is a sustainable process, and that this is something that you know, will work long term. And like, again, I cannot stress, for every single project, you need to be willing and open to experiment in public, to accept the wins and the losses and really own them, and you know, iterate on them. And if you do that, I think, again, you know, it creates a sense of legitimacy in the process that the community feels that, you know, they feel like they have, you know, a say in what's going on with the project. So token distribution. So if we go back to this kind of pre-DAO to DAO transition, right? So you've got a group of people in a room or virtually or, you know, over Zoom or whatever, that are all agreeing that they're going to have some input into a process. For some people it might be capital, for some people it might be engineering work, for some people it might be community building, and all of those people get together and they say, we're going to distribute tokens in this DAO, and then we're going to roll it out and start building a community around it. And so there's a number of different aspects of this, I guess. You need to make sure, and this again comes back to capital formation, that there is a treasury that remains within the DAO so that it can continue to operate. You know, a DAO is going to, in this environment, probably cost you at least a couple of $1 million a year to be able to function. And, you know, by the time you factored in engineering salaries and all that sort of stuff, it's pretty expensive to hire Solidity engineers at the moment. And so you need to ensure that you've got the ability to retain tokens within the treasury. The range is pretty wide, but something on the order of like 10 to 30% of tokens retained within the treasury that you can then distribute later on, maybe via OTC deals, maybe via like a balance or smart pool or something like that. And again, this is where having a pre-DAO can be quite valuable, because these decisions are fairly fraught and they're very critical. And if a sort of nascent community feels like they're being pushed on them, and that someone just writes a blog post and says, hey guys, here's the token distribution, this is where a lot of shit starts to get painful, right, within communities. People don't like the distribution, they don't agree with it, they're not bought into it. And so when you start to kind of formalize this, my personal view is that it needs to be done in collaboration with the community, and it needs to be, again, like a legitimate process. So you say, you know, we're going to start putting out, you know, a token distribution of some kind. Here's the breakdown, and then take feedback from the community. Because if you don't take community feedback, you'll probably get it wrong, right? Because the community is going to have a sense of what this needs to look like in a way that maybe a couple of people might not, right? So the first issue is you might get it wrong. The second issue is that even if you get it right, people are going to be pissed off because they feel like they're, you know, just being told what's going to happen and don't have any input into it. You also need to retain some tokens. This is a controversial topic, I guess, but for the early contributors, the people who are, you know, initially contributing to the DAO, unless you're Andre, in which case, you know, obviously you can do a fair launch. But I think we've even seen with Wiren that, you know, they've gone back and realized that not having any tokens in the treasury to be able to give to contributors is poor incentive alignment, right? So I think even the idea of like a pure fair launch maybe is starting to kind of lose sway. And then yield farming. You need to have tokens for yield farming. It's one of the best ways to distribute tokens. It's the best way, really, that you can bootstrap a protocol. So you need to make sure that you retain a big chunk of tokens to incentivize early usage. And then depending on how you form the DAO, if you had early investors, then you obviously need to have some tokens for those early investors to capture. This brings up another point, which is that if you do raise money initially into the DAO, please raise that money in stablecoins. Don't raise it in, you know, a volatile asset. As much as I love ETH, and I'm very happy for people to hold ETH, that first chunk of, you know, $1 to $2 million, like, just hold it in something that you know you've got some continuity. When you then subsequently do like a balanced or smart pool or something like that, or you do some kind of auction mechanism to do a wider distribution, by all means hold ETH, go nuts. But the initial capital really should come in stablecoins. So yeah, just to reiterate, initial capital formation stablecoins. Make sure that you take stablecoins. I cannot stress that enough, particularly in the part of the cycle that we're in now, regardless of whether you're bearish or bullish or whatever. You need to de-risk the project, and if you raise a bunch of money in a volatile asset and you find yourself in 6 months' time running out of capital, it's not a fun experience. For those of you who were around in 2018, you know what I'm talking about. Again, it's something that I think cannot be stressed enough. The final topic is governance. So there are a ton of different ways that you can govern a protocol. So with SYNTHETIX, we've chosen to take the approach of like a number of different DAOs and delegated democracy. And the reason why we went this delegated democracy approach was it was, again, like iterative experiments. But what we found is that our Discord voting created an environment where, regardless of your token holding, it was one person, one vote, right? And that actually wasn't like it wasn't an intentional thing, right? It was just kind of an organic thing that emerged, and everyone, it turns out, really likes that. Maybe the whales don't like it that much, but there's a lot more non-whales than there are whales. And so as we started to shift that towards token-based voting, we were trying to balance this idea of how do you ensure that you don't go from this one person, one vote model to whale control or plutocracy or whatever. And the way that we balanced that was to basically say you can vote for an individual member on this council. You can kind of delegate towards this person who's going to make decisions on your behalf. But even if you're a whale, best case you can get one person on the council, right? Out of 8 people in our case, right? Now you might have 3 people, 5 people, 20 people, it doesn't matter the number, but what it does is constrains the power of whales. Even if they're colluding together, it makes it much harder for them to just vote things through without any oversight. Now, again, there's Snapshot, there's compound governance module, obviously maker governance. There's a whole range of different ways that you can approach this, and people are also skeptical of delegated democracy. They're worried about career politicians and things like that. Again, I think the balance appears to be that having a delegated democracy is something that's quite powerful and does really strike a balance between having too much power for whales and not enough buy-in from people. But watch what everyone else is doing. Look at the experiments. Experiment yourself. And make sure that when you are doing something, it's not something that you can't walk back, right? So small experiments and testing and rapid iteration. And yeah, this is dynamic, right? Like this whole idea of kind of capital formation and governance, it's changing every day. There's new experiments every single day, and so monitoring what's going on and trying to stay abreast of it. I know it's hard. Is probably the best way to kind of ensure that you've got all of the tools in place to kind of implement the best governance best governance system and capital formation for your project. That's it. Thank you. I think there's time for some questions. Yeah.
Yes, do you have any questions, guys? Yeah.
There was an interesting talk yesterday by the Clearest team about how the best DAOs have a sort of an independent Supreme Court, which very deliberately the token holders have absolutely no input to. What's your opinion on that?
I think it's an interesting experiment. I think there There's definitely a risk with token holders making the wrong decisions based on kind of their own interests, right? And not necessarily having like the best long-term alignment. And so having a sort of independent, credibly neutral body that makes decisions on behalf of people can work. I guess my sense is that token holders, especially early token holders, the incentive alignment is very strong, right? And so they're going to have an awareness of what's happening within the project and all the different trade-offs and considerations that an independent body that's supposed to be kind of outside of that may not, particularly when you're talking about, a body that's overseeing multiple different things, right? That's not a specialized body. My view is that having like different specialized bodies that are focused on aspects of protocols, but individual protocols, at least in the early stages, is much more powerful.
Hi. So I read the blog post before and like try to reach out and listen to this. I'm like right at the pre-DAO stage basically, and it doesn't quite make sense. So like, how do you flow from like pre-DAO to DAO from like the investor standpoint? Because ideally, I don't want to exist in any jurisdiction. Yep. I don't want to have like any legal entity, and the funds are okay with like just standing stablecoin. But then they want to like receive something back. So let's say you mint the pre-DAO token and you give them, but like where's that guarantee for them personally to go from pre-DAO token to the token?
There's no guarantee. There's no guarantee. And this is where again, like the guarantee of a piece of paper that says like here's your equity in this thing like is bullshit, right?
But so, like it gives them comfort.
Well, if they need that, I mean, in the post, like I kind of jokingly said, right? Like we're not in the business of trying to give comfort to a bunch of boomer investors, right? Like if they can't get that having a pre-DAO token that converts into a token in the future is the best kind of guarantee that they're going to get, then there's probably poor alignment, I would argue.
Yeah, but like then. Like how many of those tokens do you mean to them versus like to you? Like how do you distribute, let's say like control in the pre-DAO stage?
Yeah.
Because there's obviously like me core contributors, like kind of like the team, but then you don't want the investors to like steer the project.
Well, again, this is where, control, right? Like it's a coordination mechanism. So, obviously if you have the initial contributors of the DAO are going to have tokens in the pre-DAO, right? Early investors, assuming you're bringing capital in, will also have control. The rest of the tokens will probably be sitting there earmarked for certain things like yield farming, but not votable, right? Yeah. Now, depending on what the breakdown of those tokens are, you may not be able to have like a clear majority, right? But arguably, even within the contributors, assuming you're all colluding together, right? You don't want to have a direct majority because if you have a clear majority, you have control, right? Yeah. So it needs to be about coordination. If you are not confident in the early stage of the people that you're bringing capital in from, that they're not going to be aligned with the project and that you're going to have like governance issues in terms of decision-making processes and not reaching consensus, stay away from those people, right? Like this is a really important thing. Like these are people collaborating in a DAO. Yes, they're only bringing capital, but you need to make sure that you have confidence in their decision-making ability and that they've got confidence in you.
So I guess like, should they be signers on the multi-sig?
Yeah, definitely. Yeah. I mean, it depends on the structure that you choose, right? If you choose a multi-sig structure, or if you choose like an Aragon DAO that's a pre-DAO that converts later, there'll be voting distribution, or they might be, they might have one signing ability, or whatever. That's, I guess, up to you to kind of negotiate with them, right? In most of the cases, I'm not seeing investors wanting to be signers. Sometimes you'll get angels that are willing to be signers for the signaling, capability. Like Oh, right, yeah. So like, like I'm a signer on a couple of DAOs, right? Like early DAOs, because they want to make sure that there's someone who's got skin in the game that's not going to rug people or whatever. So, there can be a signaling aspect to it, I guess, as well. But ultimately, that initial distribution needs to be agreed upon before you form that pre-DAO. And even if it's a multi-sig, a 4 or 5 multi-sig or whatever, and it's just the cash that's going to sit in there, that's fine. They probably don't need to be a signer on that.
Yeah, I mean, because like, let's say we want to like keep deploying contracts and stuff. Like, I don't want to wait for like, other.
So this is a separate aspect, I guess, right? Like control of the protocol. So
management.
Yeah, let's assume you're going to have like a proxy architecture where you're going to need to deploy changes to the protocol, right? You probably don't want an investor or just a capital person being on that. Some of them are happy to be, and it might be good for again for signaling to make sure that people are confident that changes to the protocol are not going to go against consensus, right? But if you're changing the protocol, then you need to have a mechanism to ensure that everyone who's got governance power is participating in that, right? Like they need to be able to participate in that decision. That's where Snapshot comes in. So if you've got pre-tokens, everyone votes in Snapshot, you reach consensus, you say this is the upgrade we're about to make, you deploy that upgrade. The people who actually sign the multi-sig to do that, again, sometimes having angel investors like a Robert or Stanny or whatever can give people confidence, but it can just as easily be the engineers working on it, right? It doesn't necessarily need to be external parties.
So I guess, yeah, I mean, I love the idea and I really wanted to do it this way, but like there are like a lot of these like small questions that
there are a lot of small questions, yeah. And I mean, maybe I need to follow up that post with like very specific recommendations. The problem is it's hard to make specific recommendations because every case is kind of different. But I think ultimately in the early phase, it's going to be a lot of kind of meat-based coordination, right? Like it just is going to be. That's just the way you need to kind of have that expectation. Also, in the early phase, no one gives a shit, right? Like there is maybe a small community. You're talking about maybe a few $1 million. Like until you get to a point where you've deployed something that's got like a ton of TVL or whatever, the stakes are fairly low, right? So I think you can afford to be a little more flexible. As the stakes get higher, you need to add more control mechanisms and checks and balances, et cetera.
All right, cool. Yeah,
cool.
Thank you. It's very cool, like
No
inspiring.
Worries. Cool, awesome.
Did anyone split their tokens in order to have more votes? And if so, what did you do? What would you do if that happened?
So I think we were lucky in SYNTHETIX because there was a fairly high cost to Sybil attacks because you need to claim every week. When you claim, the tokens are locked for a year. So the cost of setting up a new address is basically like the yield cost, right? So at that early stage it was like 40% a year or something like that, which meant like obviously for a whale the transaction cost is fairly low, but there's just an overhead cost, right, of having multiple wallets. So we've actually seen more wallet consolidation from large wallets than people splitting it out to Sybil attack. But it definitely was a concern, but we haven't sort of seen it in practice. So I would say it's something to consider. Do you have some kind of natural anti-Sybil measure that you could implement within the protocol? And if you can, then you should do it.
Thank you.
No more questions?
Do you want to share a little about how you view accountability for the people who are like in control of a protocol? Like what's your perspective on your plans of how we should attack that and other recommendations you could give people?
When you say accountability, like in what aspect?
Or like visibility into like when you have like elections like this, like how do you know people are doing good? If people aren't holding their weight, how do you surface that, stuff like that?
Yeah, I think that's something that we haven't solved yet. We don't really have good sort of decentralized ways of ensuring that people are kind of committing. I think Carl's talk yesterday about this like retroactive public goods thing is kind of an interesting model. At the moment with SYNTHETIX, we pay people up front, and there's a process where if there's consensus that someone is not participating or not contributing, then that person can be removed, but it's retroactive, right? The idea of maybe getting everyone to go out and do stuff and then making a decision about how well they did it and then paying them after the fact is quite interesting. I don't know how many people would be willing to kind of sign up for that necessarily. They want maybe a little bit more certainty around the fact that they're going to get paid. But I do think again, every single aspect of this that I've discussed, there are experiments and things playing out in different projects that the only way you can kind of even approach getting this right is to just continue to monitor those experiments and kind of cherry pick the things that are working and not working. You know, we pulled stuff from Balancer, we pulled stuff from Maker, we pulled stuff from, you know, Aave, from all different places to kind of, you know, try and create something that kind of works for Synthetics. But for your project, again, there's a whole bunch of places where, you know, there's tools that you could pull off the shelf and use really easily.
Thank you, Kain.